welcome, everyone. In this Asia session live stream, we are essentially going to go over AUD USD. We're going to talk about, how you could have entered the market this morning during New York session. So we're essentially going to break that entire trade down from this morning during New York session, and then we're going to get into um, how we can prepare for London session and possibly New York session tomorrow. So sit back, relax. We're going to get started in a couple minutes, and I'll catch you guys. Peace out. And let me know if this is better for the mic for you guys. I want to make sure you all can hear me. Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. to incorporate more education back into the channel, right? We used to really focus on education, and then certain, YouTube channels and individuals started taking some of my content and using it as their own, and that's really why I stopped kind of like sharing my perspective on the market on YouTube, and I really went to just breaking down my trades and showing you guys, the types of results I'm producing and things like that. But what I wanted to do is I wanted to get back into showing you guys what my strategy can do for you, right? For those of you all who are not day traders, welcome to my channel. My name's Mac. I've been day trading for over 5,000 hours. I've day traded over 5,000 hours. Total trading combined, close to 10,000 hours I have on the charts. Some days I would put in 16 hours of back testing. Some days I would put in 12 hours of back testing. And I have been profitable for about, I would say, close to 2 years now within the foreign exchange market. And I am now moving into equities. So dealing with equities, I've developed not necessarily a different strategy than what I use in the foreign exchange market and within the commodities market, but within the equities market, I focus more on liquidity. So within this breakdown of AUD USD, I'm essentially going to break down the market and show you guys my day trading strategy applied, right? As well as show you guys my new strategy that I've been developing. It deals with liquidity, imbalances, things like that. And I think you guys, can definitely take a lot from this and possibly even apply it to the next session that you trade. So let's go ahead and hop right into it. We're going to start on the M15 time frame because that's usually the time frame that I start whenever I'm day trading. Now, unfortunately, I can't show you guys any live trades from today. All right, I did not trade today. Or I didn't trade AUD USD today. I traded NAS 100 today. So I just traded equities market today. New York market for equities starts to move around 8:30, and then the equities market opens up at 9:30. And that's what I decided to trade today. So I did send my setups to my students and things like that, so they would be prepared for what's to come for this session. But I did not personally trade this session here. The last session that I traded for as it relates to day trading was yesterday, right? And I actually sent this trade out to all of my students. That produces 5%, and I also sent out this trade to all of my students, and that produces 5.74%. And I also sent this trade out to all my students as well, which produced us 10%. So if you guys are looking to be, so you guys can see the last 3 trades on AUD USD have all been profitable. And if you're looking to take advantage of how I see it, and these are actually low returns, I'm going to be honest with you guys, but we just have to trade whatever the market gives us. So right now, pretty much on AUD USD, as you guys can see, the market is pretty much consolidating, right? So because the market is consolidating, there's not really much we can do with it. We just have to trade whatever the market gives us. So it's been giving us 10% trades, 5% trades, but as you guys can see, that starts to add up. And we're up over 15% this week so far within the community. So if you're someone and you're not profitable, feel free to join the community. Let's go ahead and start to get into our breakdown. So on the M15 time frame, right, we can see I told all my students we would look for sells here, right? They did take place, but it did not take place within the session that I wanted it to take place. So let's actually do this really quickly. Let's get rid of it. So as you guys can see, so I did send this out to all of my students, and I told them look for sells to take place within this region here. However, it did not take place within London or New York session. I told my students, I always tell my students and my community traders what session to look for my entry schematic and what area to look for it, right? So I was thinking more so London and New York. However, it took place during Asia session. So the trade was still successful. It would have produced at 16.4%, but it took place outside of the session that we normally trade, so we can't necessarily count it. However, this still produced, this was still a very, very nice trade with that nice push to the downside. So we essentially, in this case here, we sweep sell-side liquidity. Anytime we have a sweep of some type of certain time frame, right? So this wouldn't necessarily be a swing low on the H1 time frame or the H4, but on the M15, this here is a swing low. Swing low is just a low with two higher lows on each side. So we're going to look at this candlestick wick here, and we have this higher low here and this higher low here. Or you can look at overall structure, and you can do something like this here. All right, it's completely up to you. There is a certain way that I look at market structure, but I'm not necessarily going to teach that way to you guys. I've changed the way I look at market structure, and I first have to teach that to my students, and then I will get to teaching that, to YouTube and things like that. Hold on 1 second, guys. All right, so let's go ahead and get into it. So we can see that we targeted sell-side liquidity here, and I really wanted to see price tap into this H1 POI here. All right, this was essentially a flip of this zone here. Let's go to the H1 time frame so I can show you. Right, we have this inside bar that was responsible for taking out these highs here. So we know that some type of demand came into the market on the lower time frame, which is a range, which we can slightly see on the M15 time frame. So if we continue to go down to the lower time frame, we could definitely see that range. However, it looks like in this case here, okay, instead of doing that, price decided to tap into an M5 imbalance that we had, right? Imbalances go hand in hand with liquidity. Now, for those of you guys who have access to my institutional trading courses, okay, we talk about imbalances, we talk about liquidity, we talk about order blocks, we talk about all of those things that you guys see me utilizing here, except I'm pretty much just focusing in on liquidity and imbalances. Right, so here we can see that we had some type of demand that came into the market on the M5 time frame with a little bit of imbalance right above that. Oops. Right here within this area. Right, so price pushes to the downside and taps inside of this imbalance essentially, and then we have a nice change of character within the market. Right, essentially price creates this swing low here, right? Price takes out that swing low, and then we push to the upside and we take out this swing high, which is here, that was responsible for creating this lower low. Once price pushes to the upside, right, let's actually go down to, let's go back to the M15 actually, and let's talk about this. So when you're dealing with liquidity, right, anytime you do have a sweep of liquidity, you're going to see some type of change. It will instigate liquidity, right, meaning buy stops, sell stops. We will run on the liquidity, and then we'll push the opposite direction, right? That's essentially what my liquidity strategy is really going to be based around and tied around, and I use it for equities. So I do incorporate it within the foreign exchange market, which all buys in this case here, okay? So essentially this is what I was looking at and for this morning, right? We essentially run on these lows here. Okay, there we go. Right, we essentially run on sell side liquidity here, right? Price pushes to the downside, and then instead of price showing us that it wants to continue going lower, right? Instead of doing that, what it does is it gives us a change in market momentum, right? So essentially the algorithm of price decides to deliver price differently, right? That's essentially what we're playing off of, right? So we can see that we have this break to the downside. We have a tap into our M5 demand right to the left, as well as we have some imbalance resting right above, right? And then we take out this swing high here based on the M15 time frame. It is a swing high. Why? Because we have a high with these wicks here, and then we have a lower high on both sides, which makes this middle bullish. It doesn't really matter about the mitigation and things like that. That is extra confluence, and that is how that is what is involved with my current trading plan, right? Which includes supply and demand, market structure, as well as liquidity, right? But with my liquidity strategy, I'm really just focusing in on, it's really getting on my nerves, guys, that my shirt is a little uneven. I'm not really liking it, and I can see it in the camera, but oh gosh. But it's opposite. You guys, yeah, anyways. See, this is why it helps to have a camera guy. My camera guy is not in the studio so here within this area, when we see this, when we see we have a sweep of liquidity, right, and then we have a change of momentum within the market, what this is showing us is essentially price is deciding to deliver the algorithm of price. Okay, the algorithm is deciding to deliver price differently, and the imbalance that is left behind has to be balanced out in order for price to continue delivering the algorithm of price differently, right? Which essentially just means buyers being in control or sellers being in control. That's all it is. You're just tracking that transition, and usually within that transition of buyers to sellers or sellers to buyers, usually there's a little bit of imbalance left behind within the market, especially after you have sell side liquidity or buy side liquidity that has been swept, right? So here within this area, we can see that we have a break to the downside here. We have a break to the upside here. We essentially leave imbalance within the market here, right? Imbalance is left behind. And that is essentially an area that you can target, right? You can either use that as a point of interest and break it down to a day trading time frame, such as the M1 time frame, which is what I would do. That is what is involved within my trading plan. Or you can decide to take this entry based on this time frame as long as you are within session, right? So you have two options. So the first option, let's just say you wanted to take this trade during New York session. I don't take trades outside of sessions, right? I would do something like this here. All right, 10.5 pips as the risk, not bad. And we can see, where did price peak at? Let's see where price peaked. Okay, price peaked around 6.56%, but I would have probably targeted the buy side liquidity resting above this high here and this high here. So that would have been about definitely a 5% trade on my end, right? Not bad. But what I would do, okay, I wouldn't take a risk entry. I would break this down to a day trading time frame and then go from there. I think I accidentally moved my camera as well, guys. But guess what? I'm my own cameraman today, and it looks like okay. I'm my own cameraman today, guys, and what we're gonna do is, how do I do this? Give me 1 second. Ooh, hold on. Hold on. All right, guys, there we go. Is that better? This is why it pays to have a team. I don't know what I'm doing. Anyways, so let's get back into it. So we can use this as an M15 point of interest essentially, right? And we're looking for price to trade back to that point of interest during our trading session. Whether you trade London, New York, it doesn't matter. My trades revolve around London and New York, but pretty much New York, definitely, most definitely. Especially now that I'm moving more so towards equities, New York session is it for sure. So now let's go ahead and break this down to the M1 time frame, okay? Because that would be, you know, the time frame that I would be looking to take an entry off of, since we have that M15 point of interest that took place within that M15 imbalance that I just showed you guys. And I'm going to show you guys all of the trades that are encapsulated within my liquidity trading plan, as well as all of the trades that are encapsulated within my regular day trading plan. I'm also going to be releasing a day trading guide. It's chock full of examples, my step-by-step process, the time, how I prepare, tips and tricks, psychology. Literally, it's chock full with all of that, with all of those things. And I've gotten a lot of requests. A lot of you guys are saying, you know, that you want to be able to have my day trading plan to be able to use and things like that. And some of you guys are saying you can't necessarily afford the mentorship program or the courses, which I understand, especially with the recession, you know, and inflation definitely here. So what I'm going to do is I'm going to release that. It's going to be very, very inexpensive, and I want you guys to really use it, take off with it, and take these same trades that I do, right? So let's go ahead and look right here within this M15 higher time frame point of interest. So this is the M15 higher time frame point of interest, right? And you could definitely take a trade right here, right? So this was a refinement of the M15. Let's actually go back to the M15. structure, definitely take a risk entry here, right? Whenever I am day trading, right, I always tell my students, I always tell anyone who's getting into day trading, anytime you're at 5%, that's fantastic. You can look to close the trade. So all of these trades here, I'm going to set the targets as if I was a new trader and I was taking my advice of only going for 5%, and then we'll talk about where my targets would be as an experienced trader and see, the difference with return on investment and things like that. Right? So this is one entry here. Now, in this case here, this is more advanced market structure. So what you guys are usually used to when it comes to market structure is something like this for a change of momentum within the market. But when I'm trading liquidity, I don't necessarily need to see that, right? When I'm trading liquidity, there's a secondary way that I look at market structure that's really becoming my primary way of looking at market structure, and it works like a charm. It's an absolute beautiful thing to use. I'm going to show you guys multiple examples within this area where this takes place and price respects, and it helps you get into a lot more trades, and it also helps you stay out of those trades that may trick you up and things like that, right? So in this case here, I'm paying attention to the candlesticks. I will be doing a candlestick day trading or candlestick masterclass, excuse me, where I will be teaching you guys a little bit more about how I look at market structure with candles, right? Not necessarily just with highs and lows. Yes, there are lower lows, lower highs, higher lows, but there are also other ways and forms of looking at market structure that really revolve around candlesticks. All right, candlesticks and the formation is very, very important. Anyways, so here we can see that price essentially takes out this intermediate swing high here, right? We push to the downside and then price takes it out here. When price takes that out, right, what happens? We leave imbalance within the market. And what does price do? Price comes right into this imbalance, taps right into it, and then we have a nice push to the upside, right? Absolutely beautiful. This now becomes our protected low, right? Why is this now our protected low? Because this low has mitigated imbalance within the market after an order block was created and price decided to change the delivery of the algorithm. I know I just said a lot, but the next course that I do is going to be chock full of information you guys don't want to miss. So if you guys want access to that course, make sure you are a part of the mentorship program, because all my mentorship students gain access to that course free of charge. Anyways, let's get back into it. So this now becomes a protected low. Anytime, actually, I'm not going to say too much. I can't give off too much, guys. Slow down, slow down. Okay, so as you guys can see, I love trading. So we see that price. This is an entry here. So now we have our second entry. Okay, now price pushes to the upside. What do we have here? We have an intermediate swing high, right? Same exact thing we have here. I'm looking at the candlestick patterns as well as the structure, but I'm looking at the candlestick formations, right? When this breaks with this nice move to the upside, we created imbalance here. That imbalance was closed, but what do we have here at the apex of the entire push? We have imbalance within the market. What does the market do? The market comes right back to this area and does what? Pushes to the upside. This now becomes our intermediate swing low, and it is now protected, right? So if you're someone who trades and trails your stop, I wouldn't recommend doing it. It's not something that I do. It's not something that I teach. But if you're someone that trails your stops, I'm going to show you how to properly trail your stops. You don't just put it under any low or any swing low. There are proper ways to do these types of things, and there are proper ways to actually move your stop loss. And if you're someone and you want to swing trade and really catch those swing transitioning into position size type of trades, right, then I can definitely teach you how to trail your stops and things like that properly, right? So we can see that we have this nice push to the upside here, right? And then what does price do? Price gives us some type of transition here. Now, once price gives us this transition here, I was actually looking for a possible sell here, right? Because what I did was, while I was trading the equities market, even though I missed these two entries, right? And I didn't even take this entry. I had it marked up. I didn't take these entries. I had it marked up for some reason. Anytime I do miss the best entry or the second best entry, I'm always hesitant to get into the market, because if we use premium and discount, we can see that this area we're moving further and further away from our discount, so we really don't want to look for buys. But when I hopped into the charts and I saw that I missed these two entries here, and remember, the equities market opens up at 9:30, and I'm trying to transition to the equities market. So from 9:30, which was here, right, up until around this area here, like the entire 30 minutes, I was pretty much just mentorship students how to do this, however. So if you do want this information, right, if you want to know my new liquidity trading strategy that is producing the results that we're about to continue going over here, join the mentorship program, right? Because we have 3 webinars every single week, and I'll be touching on this strategy and giving you guys trades for this strategy every single week, right? So I'm essentially looking for price to retrace around 50% and tag some type of imbalance around 50% when I encounter trend trading liquidity, right? So we can see that we have imbalance here with liquidity resting right below, but it doesn't necessarily get tagged. So once price actually tags 50%, this order is now dead, and I'm looking for bullish continuations, right? So what happens? We tag this imbalance here, okay? So we have an entry here, but we also tap into this area right here, which would be my day trading plan, right? Absolutely beautiful. Let's fix that up right there, right? So we actually missed one. Let's add that here, and we would take an entry here, right? Then we see that price pushes to the upside, right? We take out this structure here, right? We could have taken another buy position here, but this area is just pretty much a fishnet based on how these candlesticks are forming and things like that. So based on how I trade, right, I like to see clear points of interest. I don't like to guess. I don't like to, is this that? Is that this? I don't like to do any of that, right? We could have also taken an entry here, okay, with price taking out this intermediate swing high here, right? We left imbalance right here. We could have actually taken an entry. However, that's really getting into micro of the micro. You could really see that on probably the 30-second time frame, the 15-second time frame, and that those aren't time frames that I like to go to, simply because you can't pull that up on MetaTrader 4 or MetaTrader 5. So the lowest you can go down to on those platforms is the M1. So that's what I like to use as the lowest time frame for me personally. So we can see that we have a little bit of a retracement here, and then we have a nice push to the upside. Now, this push doesn't only take out internal structure, but we also tag this buy side liquidity here that you can also see on the M15 time frame here. Right here within this area, right? Buy side liquidity here, buy side liquidity here. So that was very, very important to us as it relates to our trading plan and what we look for when we are looking for a possible trade opportunity. So let's just scroll back just a little bit. Oh man. Testing. Can you guys hear me? Ah, man. No sound. That is absolutely crazy. I cannot believe that. Okay, so we're going to take this from the top. Sheesh. Okay. Okay, so, oh man, my eye. Hold on one second, guys. Hold on one second, guys. Okay, so apparently it's great information anyway, and I don't actually mind doing it. All right, so this morning during New York session, we're going to go through this kind of quickly so we can get back to where we were, so I can continue explaining to you guys my liquidity strategy, essentially. All right, so we can see that we have this sweep of liquidity break to the downside here, right? Once that takes place, we have a transition and market structure. Now, when you're trading liquidity, right, there are two ways you can go about this. You can decide to trade the markets and pay attention to supply and demand, or you can decide to trade the markets and just simply pay attention to liquidity. It's completely up to you, but there are two ways to do it. As you are moving towards the equity markets, liquidity is best to trade, right? You can definitely take advantage of supply and demand and things like that, but when it comes to equities, price is moved by an algorithm, all right? It's absolutely moved by an algorithm. The algorithm instigates liquidity and imbalances within the market. We can use liquidity and imbalances within the market in order to take advantage of the markets when it comes to really equities, but you can also use it with foreign exchange market and things like that, right? So if you guys do follow me on social media at Trillionaire Mac, you guys know that I am moving towards becoming or being an equities trader, right? Still, dabbling within the foreign exchange market and things like that, but moving towards just being an equities trader, right? So as we can see this morning on AUD USD, during London session, we had a mitigation of this M5 demand here. All right, let's see. Let's go to it really quickly. Right here within this area with a little bit of imbalance resting right above. Right, so on the M15 time frame, once price taps into that area, give me 1 second, guys. Let's see. All right, we're good. All right, so once price actually taps to that area, then we have an M15 transition here. All right, during that M15 transition, we leave a little bit of imbalance within the market right here within this area, and price essentially comes back to that imbalance to fill it. Right, that imbalance is located in between this wick high here and this wick low. Price taps to that area and gives us that imbalance. Once that imbalance takes place, that essentially gives us a point of interest to play from, and we can go to the M1 time frame to start to take advantage. So within this live stream, I'm essentially going to show you guys how to take continuation trades and how to also take advantage of my trading plan. All right, so there's a new way that I am looking at structure. It really revolves around candlesticks. Every single time you guys see a pink dot here, okay, that is a valid entry if you're following my trading plan, whether that be my liquidity trading plan or my entire day trading plan itself, right? Those of you who joined the day trading masterclass, you guys have been sending me phenomenal results. You guys have been able to pass funded account challenges, and you guys are making awesome withdrawals. So congrats to you guys who are already producing those phenomenal results, right? Let's see. So as it relates to we'll go over the liquidity trading plan first, and then we'll just incorporate both as we go along. So this is the refinement for the M15 point of interest. You could have taken a risk entry, which would have been here. It is fine to take a risk entry, especially seeing as though we are within session, and this is the apex on the M15 with a little bit of inducement resting here in the form of sell side liquidity, right? Once price taps to that area, we then push to the upside. We do push back to the downside, but before we push to the downside, we create an intermediate swing high here. That intermediate swing high is taken out with this nice push to the upside, and imbalance is left within the market. Our second entry took place at this imbalance being closed, okay? At the end, once I'm done with everything, then we'll bring out the long positions, and we'll see our return on investment, all while targeting this buy side liquidity that was formed during New York session as well, right? So once price pushes to the upside, right, what happens? We take out another intermediate high, which is here, and we leave a little bit of imbalance in the market, which is resting here, right? So that is going to be based on my liquidity trading strategy. And then if we're going based on my day trading plan, then we have an apex demand, which is here, that was responsible for taking out this supply after we saw that this was the reaction here, right? So when price comes back down to this area, we actually have two entry opportunities. Now, I was looking for a possible counter trend sell here, all right, just as a hedge position, a fun little hedge position. However, we did not get this filled, and I deleted this order once we ran about 50% of this entire leg here, okay? And I'm really, if I would have gotten into this trade here, I would have looked to cover, okay? around the imbalance located at 50%. Now, these are set in stone mechanical rules that don't change, okay? Now, I know some of you guys listening to this, you guys are like, wow, he's talking fast, there's a lot going on, this and that. I couldn't hear for the first 18 minutes of the live stream, but I will be incorporating these lessons within my live streams and things like that, so just hit that notification icon to be updated whenever I go live, right? So we see that price taps back into this area here. This would have been another entry just following the plan, as well as this area here, right? So we'll, put the lipstick and things like that as it relates to the long and short positions on the chart in just a second. So once we actually hit that imbalance, then it doesn't make any sense for me to actually keep this order here, all right? So that order was then deleted. However, this could have been a fantastic reversal here. Why? Simply because we tag buy side liquidity here, and then we start to see a reversal here. We essentially create an intermediate swing low here, right? Price runs on that intermediate swing low. When it runs on that intermediate swing low, we also leave a little bit of imbalance within the market here, and a little bit of inducement resting right under that imbalance, right? So that would have been an awesome, counter trend trade, and our target would have been this imbalance right here, since it's around the 50%. Right? So as price continues to move to the upside, we can see that we tag that buy side liquidity with a nice move to the upside here. We do have intermediate swing highs here, right? What does price do? Price tags the buy side liquidity resting above this area, also leaves imbalance within the market. Price then comes back to this area. We tag, okay, that imbalance within the market. So this was entry one, and then we also tap into the apex demand, which is resting here. That was responsible for taking out the supply, and that was entry two, right? All in all, you're pretty much just targeting this buy side liquidity. When you are targeting this buy side liquidity, if price is not giving you at least 5% return on investment, then I increase it to 5R. I'm not taking a day trade that is not at least giving me 5R on the trade, and we hardly ever have setups that don't give us 5R unless we're taking buy or sell positions late into the premium or discount, right? So, as we continue to move to the upside here, we're pretty much getting into premium. Actually, we're pretty much in premium. So we have to keep those things in mind when we are taking these buy positions and continuations. So our first entry opportunity would have been here, all right? Following my trading plan, stop loss would have been resting here. That's around 3.5 pips, not bad at all. All right. Tagging buy side liquidity resting right up here within this area, 11.17%. Easy, guys. Just following my trading plan. Join the mentorship program so I can teach it to you. Second entry opportunity here, right? Stop loss resting below this candle low here. That's around 5.2 pips. I would have rounded that up to 5.5. Tagging buy side liquidity is at least 5R. It is 5.58. Easy. Second trade, or excuse me, third trade, right? And these are just all, all these extra trades are just continuations. You don't necessarily have to take the continuations, guys, right? Usually I will take 1 or 2 entries and then I'm good. And then I just allow price to hit my targets. I'm not usually a guy that takes, 5, 6 entries, things like that. However, these are just opportunities that are available to you if you are following my trading plan. So we can see that tagging buy side liquidity does not give us 5R, so we're going to round this up to 5R. There we go. 5% return. And then we also have this region right here, right, following my day trading plan. So this is not liquidity right here. This is just the day trading plan. All right, we can see that's around 4 pips. And we can see tagging buy side liquidity produces about 7.53R. Beautiful. And guys, this takes place every single day, all of these continuations. So when you guys see me do like a trade breakdown, and let's say it's 12-15%, that's while holding, yes, the apex of the move, right? So this one is 11.17% as the apex of the move. Yes, that's holding the apex, but imagine what the return on investment would be if we took every single trade that followed our trading plan. I just don't do that, right? Why don't I do that? Well, it's a lot on your mental, and it takes a lot of energy. It takes a lot of work. It takes a lot of effort. It's not very straightforward, and that is why I'm good without it, to be honest. All right, so this trade 5R would be around 50 pips. I'm not sure if prices hit 50 pips just yet. All right, remember this is a little far into premium pricing, right? When you're looking to take buys within this area here. Why? Let me go ahead and break it down to you guys. So let's grab this here. Right, and we can see that these entries here pretty much around, well, this entry here is definitely within premium, right? This entry here is pretty much around equilibrium, but it is still, risky as we continue to push to the upside with these trades. All right, 5R would be here. Solid. And we can see this one, I'm pretty sure was hit. This one was not hit just, oh, was it? No, it wasn't. Very, very close, not just yet. So we can't necessarily count it because it hasn't hit 5R yet. So let's calculate the return on investment if you were following my trading plan and you were simply just moving forward within the market and taking advantage of the trade alerts. All right, so I have my calculator out here. Let's go over the first trade, which is the Apex 11.17. Guys, trading is very, very easy. Allow me to show you how easy it is, right? 5.58, right? We have 5% here, 7.53. All right, and then we have 5% here as well. That would have been a 34.28% morning. Now, that's the best case scenario if you're taking every single trade following the trading plan, right? Now, so far this week, we're up 15.74%, right? Whenever we do have a trade, we don't take every single continuation as a possible entry. I may take one or two, and usually after that, I pretty much leave it alone. Usually we only take one entry per trade idea. That's usually how I roll. But anyways, if you are someone who likes to stack, or take entries all the way throughout, then, my trading plan can definitely, assist you with producing, 34% in one session, as you guys can see here, right? So if you guys enjoyed it, please leave a like. My apologies for the stream, you guys not being able to hear me for the first 18 minutes, which is absolutely crazy. My bad, guys. My bad. Anyways, hope you guys enjoyed. If you guys did, please leave a like on the stream. Much appreciated. And if you are not a part of the YouTube family, feel free to go ahead and subscribe.